This podcast is solely for the attention of institutional, professional, qualified or sophisticated investors and distributors.
Hi everyone, welcome to this new edition of 5 Minutes to Know Your Way Around, in which we are going to talk about the ECB Governing Council of March 10th, 2022. Before starting, let's recall the context that prevailed at the time of this council. Before the invasion of Ukraine by Russia, the European economic context was very favorable to a normalization of monetary policy, with inflation at its highest and unemployment at its lowest since the creation of the Eurozone, and with very good PMI surveys. Of course, the invasion of Ukraine changes a lot of things, with a very sharp increase in commodity prices, oil, gas, metals, and even agricultural commodities. So a very complicated context for this Governing Council. Nevertheless, the ECB confirmed its plan to normalize its monetary policy. So of course, for the governors, the war between Ukraine and Russia will have a material impact on economic activity and inflation through higher energy and commodity prices, the disruption of international commerce, and weaker confidence. But this impact is by nature uncertain and will depend on how the conflict evolves, on the impact of current sanctions, and on possible further measures. Clearly, ECB economists do not know yet how to take the war into account in economic forecasts. In the meantime, inflation projections have been revised sharply upwards, 5.1% in 2022, compared to 3.2% in the forecast published in December, but growth forecasts have been only modestly reduced, 3.7% in 2022, compared to 4.2% in the forecast published in December. We might have expected a larger revision of the growth forecast, but the explanation here is that the ECB has unveiled two alternative scenarios, and both of them are more negative. Among the measures taken, there is the confirmation that the PEP, the Exceptional Asset Purchase Program launched during the pandemic, will stop at the end of March, but above all, there is the fact that the net asset purchases under the APP, the other ECB's big asset purchase program, will be lower in Q2. 40 billion euros in April, 30 billion in May and 20 billion in June, compared to the 40 billion initially announced for each month. The calibration of net purchases for the third quarter will be data dependent, so no clear commitment yet, but purchases will stop in the third quarter if the medium-term inflation outlook does not weaken. The last news for the measures is that while the previous statement indicated that the first rate hike would take place shortly after the end of the net asset purchases, the new statement indicates that it will take some time later. Christine Lagarde indicated at the press conference that the period between the end of the asset purchases and the first rate hike could range from 1 week to several months. All in all, it is clear that the ECB is going more rapidly in its policy normalization with a quicker end of asset purchases, but it keeps room of maneuver in the event of a deterioration of the situation. In reality, this intermediary path is mostly a way to allow the Governing Council to agree on a balanced policy, as there were very different views in the Council. Some wanted the ECB to change nothing, some did not want any conditionality for the end of asset purchases. One interesting thing in the ECB communication is the comeback of the traditional call for a more expansionary fiscal policy. On several occasions, Christine Lagarde indicated that a more expansionary fiscal policy was necessary to deal with rising energy prices. In particular, she said, the impact of the massive energy price shock on people and businesses may be partly cushioned by drawing on savings accumulating during the pandemic and by compensatory fiscal measures. This is perhaps one of the elements because of which the ECB is not that pessimistic on growth, and we might imagine that it would accelerate its normalization if governments spend more. We might conclude by saying that the ECB confirms that it is normalizing its monetary policy despite the war in Ukraine, and in doing so, it confirms that it wants to try to become a normal central bank again, that is to say, a central bank that tightens its policy when the medium-term inflation outlook exceeds the 2% target. We'll see if it's able to do so. Thank you for listening and talk to you soon.
All comments and analysis reflect CPR AM views on market conditions and its evolution, according to information known at the time. As a result of the simplified nature of the information contained in this document, that information is necessarily partial and incomplete.